And to chair this panel, I'm thrilled to introduce Stephanie Flanders, Senior Executive Editor for Economics at Bloomberg News, whose experience ranges from 5 years as BBC Economics Editor to JP Morgan's Asset Management's Chief Market Strategist for Britain and Europe. The debate will now be opened with a live introductory message from Jeffrey Sachs, President of the United Nations Sustainable Development Solutions Network and Professor at Columbia University. Who better to open this debate than one of the world's leading experts on sustainable development, economic development, and the fight against poverty? Over to you, Mr. Sachs.
Thank you very much. Good to be with everybody, and thanks for hosting this important discussion, and thanks to all the students that are engaged. Obviously, we are in a complex crisis that was complex enough before COVID-19 and now has become even more dramatic. If one had made a tour of the world economy at the end of 2019 and asked, how are we doing on sustainable development and the SDGs, I think the answer would have been pretty poorly. The reason being that despite having a shared global agenda of 17 sustainable development goals and the Paris Climate Agreement, we also had Donald Trump. We had nationalism in many parts of the world. We had very weak multilateralism, and the underlying market forces were not conducive either to social inclusion nor to environmental sustainability. And nothing was very hopeful between 2015, when the SDGs and the Paris Agreement were signed, and the end of 2019. Then came COVID, and everything has become vastly more dire, of course, starting with the loss of life and the massive illness, and the fact that this virus continues to mutate in dangerous ways. 2020 was also a very bad year from the point of view of any kind of multilateralism. Of course, we still had Trump as president. He is psychopathic at an individual level, and he was leading a white nationalist political movement as well, which was opposed to multilateralism and was pretty racist to the core. So 2020 was absolutely terrible, not only in terms of the disease burden, but a further breakdown of global cooperation, with the United States walking out of the World Health Organization at the height of the pandemic, and Pompeo, who was certainly the worst Secretary of State in modern American history, trying to stoke a Cold War with, or worse, with China in a kind of crude evangelical, God knows what, vision of American nationalism. So 2020 was botched in so many ways, but most importantly in cooperating to contain the pandemic itself. The pandemic not only had profound economic ramifications, but it also dramatically widened inequalities, because the online world, our world, was able to continue and in some ways even to benefit hugely from this pandemic. As everybody has come to understand, the richest people in the world got vastly richer during the past 12 months. Best estimate is that the richest 500 people in the world, who had at the start of 2020 about $6.1 trillion of wealth, experienced capital gains of about 1.5 trillion, probably more because I'm a week out of date and the stock market's gone up, to around 7.6 or 7.7 trillion dollars. That's 500 people. So the digital world is owned by those people, and this has been a boon for the digital world. But half the world is not even on the internet. And in a world in which digital services suddenly became vital, life-saving, whether it was for government services or children in school or telemedicine or monitoring the pandemic, suddenly the world was even vastly more divided. And as Isabella said a moment ago, many of the other direct ramifications, the collapse of tourism, the collapse of remittances to many countries, meant a further exacerbation of poverty. So 2019 was already flashing red in terms of sustainable development. 2021 exacerbated every degree of crisis. And here, 2020, and here we are. What are we going to do, and how are we going to move forward? So there's one overwhelming part of good news, and that is where I would start, which is that the digital technologies and the green technologies are potentially amazing for solving problems both about poverty and about environmental destruction. On the green side of the ledger, the falling costs of renewable energy are astounding. The ability to build very, very large scale, zero carbon energy plants with low cost storage is a dramatic advance. The sharp fall of costs of offshore wind is another huge advance. On many, many technological fronts, we now have a clear shot at decarbonization of the world economy at very low financial cost, and of course at profound human and environmental benefits. That's good news. The second piece of good news is that digital technologies, while they are not the friends of equality right now because of a world that is fundamentally divided between the digital haves and the digital have-nots, is a technology that can make a huge, huge difference in narrowing access to essential services. You really can do a lot of education online. You can do a lot of telemedicine online. You can provide a lot of government services online. You can do banking and financing online. And of course, the rich world's been doing that during the past 12 months and did it with great success. You can create jobs across international borders pretty much effortlessly online because we don't go to our office anymore. And while someday we'll go back to the office, we'll never go back to the office 9 to 5. And the ability to have new jobs created in developing countries that are global jobs has opened up in brand new ways, a real potential boost for development. So in my view, what we essentially face at its very core is the question of intentionality. That is a world community that acts consciously with planning and foresight and structures to achieve the goals that we've set, and with a realistic financing model so that we can understand how to scale up rapidly and to overcome the digital divide, or to scale up dramatically for electrification, for the billions of people that do not have access to reliable modern energy services. And if we put together intentionality, plans, and financing, we actually could make a profound breakthrough. So that's the reason for optimism. The reason for pessimism is we still seem to be human beings with every foible, weakness, short-termism, inability to focus, and political structures that are profoundly deficient in many parts of the world, including we saw very vividly in the UK, in the United States, in the European Union, where we weren't rational enough to save ourselves, much less to engage with the rest of the world. I've not said much about markets as the solution to this, because I don't believe that we're going to achieve these goals mainly by letting things move forward on a for-profit market basis alone. While certain things come out of markets quite well, the fact that half the world is on internet, wireless, or fixed cable and wire is a great achievement of the market economy. The fact that the other half is not online is a demonstration of the weaknesses of the market economy. By itself, the market economy does not achieve inclusion. It achieves some innovation, it achieves breakthroughs, it can make the world more comfortable for rich people, but it cannot make inclusion, nor does it provide for environmental sustainability on its own. Environmental sustainability is a quintessential set of public goods that requires coherent and cohesive public actions, not just a corrective Pigouvian tax on carbon, a lot more than that, to build the new infrastructure for a green economy, to set sharp limits on land use, to protect half the world in order to protect all of biodiversity, and so forth. That requires a tremendous amount of governance at the national level, the regional level, and the global level. So that's the area of concern and design for me. How do we make these systems work? How do we overcome the Trumps of the world, the America First poison, the nationalism poison, which has poisoned our world on many occasions in devastating ways in the last century? How do we make effective regional cooperation? And how do we make effective global cooperation? And I'll just end quickly on these points. From a national perspective, every nation should know it cannot solve its problems other than by cooperating with the neighboring countries, period. Because every country requires cooperation on renewable energy, on managing ecosystems, and so forth. There may be some remote, small island developing states which have a different problem, but I'm talking mostly about, or I'm talking about most of the world, the United States, which needs Canada and Mexico in order to have a renewable energy system. I'm talking about Europe. I'm talking about the UK, despite its recent fantasies about going it alone, and other parts of the world. Look to your neighbors and cooperate. And of course, think quickly about all the parts of the world where that's not the case, where Pakistan and India don't cooperate, where India and China don't cooperate, where China, Japan, and Korea have a very hard time cooperating, and so forth. Many of where Iran and Saudi Arabia don't cooperate. Many of these local battles go back a long time, but they're stoked by outside powers, which is especially pernicious. So first, we need cooperation within broad regions. Second, we need global cooperation according to multilateral standards and equal justice. And we need to put away quickly the anti-China sentiments which rose sharply in the United States in recent years, which are a reflection of American arrogance and hubris, really deeply steeped in our traditions of a search for dominance, and understand that cooperating with China and the US and EU, cooperating across regions, European Union, African Union, North America, the new regional comprehensive economic partnership in the Asia Pacific and so forth, is absolutely essential. Remember that this year we have many global summits coming up. We have a World Food System Summit at the UN in September. We have the COP15 of the Convention on Biological Diversity to, at the last moment, try to save the biodiversity of the planet, being hosted by China in Kunming in October. We have COP26 to get all nations committed to decarbonization by mid-century, taking place in Glasgow at the beginning of November 2021. We've got an agenda cut out for us. We also have the day-to-day agenda of finally having a rational approach to this pandemic. And most importantly, we need a globally cooperative approach, both to contain the spread of the virus, which we have not had to this day, and to ensure the scaling up and inclusive distribution of vaccines, where we have an organization, COVAX, but it doesn't have the funds. So we need to come up with the financing, the strategies, and the global cooperation to make this happen. And I see I'm at the end of my time, but I will just add one more thought for your consideration. If we scale up the capacity of the multilateral financial institutions, like the EIB, the EBRD, the African Development Bank, the Inter-American Development Bank, the Islamic Development Bank, the Asian Development Bank, by paying in a little bit of capital, we can multiply roughly by a factor of 50 or so the capacity of these institutions to finance the transformation I've been talking about. So we should be thinking about strategies of global finance for large-scale building of the infrastructure we need for sustainable development. I think I took too much time. Isabella, thanks, and back to you.
Not at all. Thank you very much for that, Mr. Sachs. It was a fascinating bunch of information you gave there, and I think a really good way to start the panel discussion now.
Great.
Definitely a lot of things to work off of. So thank you very much for that.
Wonderful. Thanks a lot for having me.
Thank you. It's been an honor. So we'll now continue with the rest of the panel discussion. I'll pass over to Stephanie Flanders and the rest of the panelists. Just a brief reminder, please do send in your questions using Slido. This can be a very interesting debate. I really look forward to it. So over to the panelists. Thank you.
Thank you very much, Isabella, and I'm excited that we have such a great panel to discuss what Jeff said, but also what you all think about the current situation. I think Jeff did give us reasons for optimism. What we ought to do, we now can do, but of course we don't know necessarily whether ought and can will actually generate the will to do. I thought it would be useful, since I now have economists and reporters working for me at Bloomberg, just two statistics to capture how the pandemic has mirrored and exacerbated the inequalities that we came into 2020 with, that Jeff described. As we know, 120 million vaccinations or doses of vaccination have occurred now already in many parts of the world, more than have caught COVID-19. 89% of those vaccinations have happened in either the advanced economies or China. And I think only a tiny share, we can barely track the number of the remaining 11% that will have been in the least developed countries. So that's one side of the inequality that we're seeing right now in some of these conversations around vaccine nationalism. If you think about how governments have been able to respond to the pandemic, extraordinary responses from governments across the advanced world. The advanced economies, with their roughly billion population, have been able to spend an extra $7 trillion in response to COVID. So on top of what they were already planning to do in the way of borrowing last year, that's $7,000 per head. Sub-Saharan Africa, slightly larger population, has been able to spend an extra 45 billion. So that's 150th as much, or just over $40 a head, 40 versus 7,000. These numbers aren't a surprise to us, but I thought we should just capture the scale of what we've been talking about in terms of those two sides of the response to this health crisis, which of course comes on top of the many other crises that the SDGs are trying to address. So enough of me. I'm going to try not to talk very much more now. We're going to have a little bit less time than planned. We've already had introductions to our excellent speakers. So let me start with you, Joe Stiglitz, Professor Stiglitz. What would you say in response to Jeff, but also in thinking about the scale of the problem now, what the pandemic has left in its wake, and potentially what lies ahead?
Well, one needs to think about this both within countries and across countries, as you pointed out. The developing countries, emerging markets, can't sustain the kind of spending that the United States has, or Europe. The United States, as you mentioned, has spent already $3-4 trillion, and President Biden is asking for another $2 trillion. And I think the broad consensus is we need that for the kind of recovery. And it's worked. It's interesting that because the United States has spent so much, the economic downturn in the United States has been much more limited, about 3%. On the other hand, because Europe has not spent as much, it's had a much more serious economic downturn. But then you compare that with LDCs and emerging markets that can't spend anything. Some of them had a very severe downturn, some 12%, others 8%, but really very severe. And that means enormous increases in poverty in these countries. One of the interesting aspects of the response in the United States is an awareness of how, as you said, the disease has both exposed and exacerbated the inequalities. And the positive aspect of the Biden proposals is actually to go directly to that inequality. Part of what he had proposed is, for instance, a raise in the minimum wage. That was defeated yesterday in Congress, so that won't be part of it. But there is a broad support, for instance, for child tax credits, support for children, so strong that it would have a major effect in reducing poverty among children, which has been a scourge in the United States. So by calling attention to the inequalities, the pandemic may have had, at least under President Biden, a very positive response throughout the country in engendering support for a set of policies that will, I think, begin to address America's great inequalities.
And Petya, Koeva-Brooks, if I turn to you, you're sitting in the International Monetary Fund, you're thinking about these issues. How do you see the impact today on developing countries, but also potentially what impact we obviously know there's been a big cost, but how much if this is a reversal, a lost decade potentially, as opposed to just a halting? You know, how lasting do you think the impact could be?
So what we've seen so far is indeed it was a massive collapse of output last year. And even though we've upgraded our forecasts a bit, we're still talking about a situation that is less dire than we previously thought, with global growth at about minus 3.5 last year. But it's really when we're looking at the recoveries that we see that divergence that was already mentioned. So if we look at the output losses measured as what the level of output would have been without the crisis, what we had previously forecasted, and comparing it to what we are projecting now, by the end of 2022, for the world as a whole, we are talking about a difference of about 3.5%. Now, for advanced economies, it's about 2.5, and for emerging and developing economies is about 4.5. But even with those within that 4.5 for the emerging and developing countries, there's enormous variation. So for Latin America, we're talking of the order of -7, Sub-Saharan Africa, 6.5, 7. Asia, actually excluding China, is also a very, very large number. So, and of course, on the other end of the spectrum, we have China and the US that are only about -1, again, compared to what it would have been. Again, all of this is now projections. So then we think about what are the factors, what is driving that divergence, and two things come to mind, and two things is what we also see in our analysis. One is the uneven access to vaccinations. So what we are expecting, what is embedded in this forecast, is that by the summer of this year, a lot of the advanced economies and some emerging markets will have these mass vaccination programs and such. But it's really some of the smaller emerging markets and of course the low income countries where, you know, we're not unfortunately, we are not expecting this to be completed until 22, 23, and even beyond. And the cost of that is just unimaginable. And it's not, you know, apart from the human cost, which is, again, mind-boggling. The point that we're trying to make is that it's really in everybody's business, is everybody's interest to vaccinate everybody, because otherwise we have these new strains that make the efficacy of the vaccines also lower and such. So health is a global public good in the most literal sense. So we estimate, again, if we were to actually do this, to accelerate the vaccination of these programs in these other countries, the benefit of that would be in the order of $9 trillion by 2025. And about 4 billion of that would go to the advanced economies and the rest to emerging markets. But before I finish, I wanted to say the second point, which is also very important. The other part of this divergence comes from a different ability to provide policy support, something that Professor Stiglitz already mentioned. And there, again, and what you alluded to earlier, the difference is staggering. And it's really the low income countries that had been able to do the least, just because of, you know, their debt levels and access to markets and such. But even within emerging markets, we've seen very large differences. I mean, if you compare Brazil, for example, they've been able to provide a lot of support in terms of cash transfers that actually had even reduced the numbers of extreme poverty, and which of course would have skyrocketed without that. And then you have Mexico, where it's a completely different picture. Very little was provided in terms of fiscal support and such. And even though many countries have been able to do a lot in both fiscal and monetary policy, there is a real question of whether they'll be able to do that going forward, depending on what financing conditions are in the world. So again, where we come in here is to make the argument and to mobilize resources, and we're doing a lot of that on our own as well, providing emergency assistance to low-income countries. We did over $100 billion altogether in emergency and other programs, but also make the case for debt relief, for just creating that space so that those that are most vulnerable could actually also support their households and firms, and that is what's going to reduce the long-term damage. I'll stop here.
And of course, the numbers you're talking about for the loss of GDP, that's overall GDP. And in countries which have growing populations, that's even worse, the impact on any kind of progress with living standards on income per head. That's also much more important for the developing countries.
Yes, absolutely. And actually what we see is that on current trends, about half of the countries that before were converging towards advanced economies level in the period, in the 3 years 2020 to 2023, 22 would actually be diverging now. So this issue is really enormous.
So Minister Mthuli Ncube, thank you for being with us. You're now have a very distinguished career as an economist, but you're also in the hot seat now, trying to implement policy on the ground. So I just wonder, how do you see this? And what's the best, when we talk about the possibility for more effective global action, what is the most important thing that you could see from the Biden administration and from more international cooperation?
What would really assist African countries, the developing world, is support from the Biden administration, obviously through directly and through the various platforms in institutions, be they the World Bank, the IMF, the African Development Bank, all those are important institutions for supporting Africa and the developing world. I think the one issue that has come up is rising debt levels. And I think this is something that Brooks has already mentioned, that I think assistance from the multilateral institutions to make sure that these countries can manage the rising debt levels in a sustainable way. Of course, something has been done through the IMF initiative that is welcome. And I think really the thing to do is to stretch it so that these countries can be able to service their debts in future. So that's one. The other area is to support countries in accessing the vaccine. I think Jeffrey Sachs made a very important point, and Brooks also has emphasized that, look, we are now having a vaccine divide, a vaccine inequality. We have an unequal access to the vaccine. So these developing countries need support from the developed countries to access the vaccine and pay for it. Recently, there's a country, I will not mention it, that accessed the vaccine at about $5.50 per shot. And yet we know that the developed countries are accessing it at $3 per shot. So already you can see the cost of the vaccine is higher for the developing world, for emerging markets. And we need this kind of support to access the vaccine. Maybe also let me comment on some of the areas that Jeffrey Sachs raised, for instance, that the green economy and the digital economy are providing an opportunity for the developing world as well. It's not all gloom and despair. I kind of agree with this. So really initiatives around investing in green infrastructure, hydropower, solar energy and so forth are critical for growing these economies. But much needs to be done by these countries themselves, ourselves on the ground, make sure that there is access to, rather with the right policies to support this kind of investment, to absorb this kind of support from the multilateral institutions, from the private sector investors. So I agree that this is an opportunity, but global capital is required for these opportunities to be realized. Finally, on the issue of the digital economy, I must say that most African countries have not done too badly, especially in the areas of mobile banking. Generally, the mobile banking platforms are functional in most African countries, even better than actually in developed countries. The issue has been accessing, let's say, the teaching material. That is the problematic part. We're not unable to access teaching material easily for poorer schools, but everyone has a mobile phone. So maybe really it's about making sure that our tech people can get those lessons on mobile phones rather than on laptops and so forth. That's really the key here. But the bottom line is the emerging countries need support. They don't have enough fiscal space. The access to the vaccine is going to be difficult. We need support in this regard. Let me stop here for now.
Ravi, Kanbur, we've covered a lot of ground. I'm interested in your thoughts.
Sure, thanks, Stephanie, and hi to my friends and colleagues on the panel. So I thought I would step out of the pandemic, so to speak, because everybody has talked about that and enough has been said about that. But to think about the medium term and beyond the pandemic, so looking ahead, say 15, 20 years after we come out of this. And I want to do that by looking actually 15, 20 years back from before the pandemic, 2019, 20. So what were the trends in inequality over the last 15, 20 years? What explains that, and are those likely to persist beyond the pandemic, so to speak? And actually, if we look at the 15, 20 years before the pandemic, there are actually, although there's been massive increase in inequality and so on, which we're all aware of, there are actually some notes of optimism, because again, as many of you know, in the Latin American countries, for a period of 15 to 20 years, inequality actually fell. And this was the result of purposive policy in terms of redistribution, in terms of minimum wage and so on. So in other words, policy can indeed turn things around. And I think that's an optimistic message. But I think there are grounds for caution as we look ahead in the next 15, 20 years, again, building on what's been going on in the previous 15, 20 years. There are really three things that I want to emphasize, many of which have been touched on here. One is the sort of massive trend towards labor-saving technology. And I think that is, I mean, we all know about that, and that is a major force in my mind, leading to, despite all the advantages that Jeff stressed and so on, leading to increases in inequality. And I think there's empirical evidence which on this thing. But the second is that as countries try to address these issues, as the finance ministers like Mthuli and so on try to address these issues, they really need government revenue to do this, whether it's to raise education, whether it's to redistribute and so on. And what we find, I think, is because of mobility of capital, mobility of skilled labor, there's a constraint on governments raising revenue. And in fact, this was not the case 40, 50 years ago, but the mobility of capital has in fact put constraints on the government. And as you see, what's been happening to statutory corporate tax rates in OECD countries, other countries, over the last 15, 20 years. But the third thing I think is if we do have this national coordination issue on the tax and revenue side, then what you need are international institutions to manage this coordination. And I think this is a third area where I think we have an issue over going forward in the next 15 to 20 years, because I believe that institutions like the World Bank, like the multilateral development banks, really need to come up to speed in terms of cross-national, cross-global, multilateral issues. I mean, they've been very good at country-specific investment and country-specific support, which is, of course, they were designed that way. And of course, they're changing, but I think there's a major issue there. So let me just say that if we look back 20 years before COVID, there are signs of optimism that actually policy can help. Policy does matter. But looking ahead, there are three notes of caution. One is this technological juggernaut that we're facing. Secondly, the mobility of capital and mobility of skilled labor, which puts a constraint on government's ability to raise revenues. And thirdly, the weakness of global institutions in addressing coordination across countries. Thank you.
And there was, in what you've written recently, I thought there was also the striking thing that you noted from some other research about how the nature of the poor has changed to some extent, that there's now the majority of the poorest people in the world are in the middle income countries and not necessarily in the poorest countries. And that in itself poses a challenge to international efforts.
Yes, I think that's a very interesting development over the last 15, 20 years. The connection between a person being poor and that person's country being poor is now much looser than it was compared to 30, 40 years ago, because as the numbers show, 30 years ago, 90% of the world's poor lived in low-income countries. Today, 3/4 of the world's poor live in middle-income countries. Of course, the poor haven't moved. They've been reclassified, so to speak. And if international agencies keep the old ways of classifying countries and designing aid policies on that basis, then they will miss out on the bulk of the world's poor. And I think this is an issue that the international community should be taking on board as well.
Well, we should obviously ask Petya about that, but I know that Joe is also going to, given that we started late, he's going to run out of time maybe a little bit sooner than the rest of us. So let me go to you. Ravi's taking us into the long term, but I think we probably also need to spend a minute on what Joe Biden could do right now and what difference he makes to what's possible in the global arena. SDRs is one thing that's been discussed. What do you see right now that could mark the difference between a Biden world and a Trump world?
Oh, there's lots of things. And
for this debate, I should say, not for America necessarily, but for the world.
No, I understand. The special drawing rights are really important. Those are kind of money that the IMF issues that go to the countries in proportion to their quotas. But there are even suggestions that the rich countries who will get a lot of them can redonate them in a trust fund or lend them in a trust fund to help the developing countries. And the head of the IMF has taken a very strong leadership role in calling for a $500 billion issuance of SDRs, and Trump essentially vetoed it. So I'm hoping that the United States will support it. There's a lot of support in the US Congress right now to expand that number to $2 trillion. And of course, if that happens, and if that has to be ratified by parliaments, congresses in other countries, but that would also make a very big difference. The United States, the Biden administration can also make a difference in the issue of debt relief. Again, the international community has talked about debt relief. At the beginning, they talked only about a stay in payment. That just means that you get more and more indebted. But there's now more serious talk about debt relief. But the difficulty, the challenge, is to get the private sector involved. And they've been very recalcitrant. And there are, the courts in the United States typically give deference to, in areas of international policy, to the administration. And if the administration came out with a strong statement that we recognize the general principles of sovereign immunity, that the governments can't be hauled into court in the same way that ordinary individuals can, that we recognize that this is a time where a principle called force majeure, that is, you can sign an agreement, but if events that you could not predict, like the pandemic, happen, you don't have to fulfill the contract. So this is a time, if there ever was one, where force majeure is relevant. By recognizing that, that would help motivate, I hope, the private sector to participate in the debt relief. And then finally, there are, as Ravi talked about, international institutions and the international rules of the game play an important role, like the WTO. Unfortunately, a lot of those rules are designed for the advanced countries. Trump said they were disadvantaged in the United States. We wrote those rules, and we wrote them to help our corporations. Redoing some of those rules would help. And one example which combines the long term and the short term is recognizing that in the provision of the WTO related to intellectual property, there is a provision called compulsory licenses that allows the use of intellectual property of the advanced countries, or of anybody, for particularly matters of health. And if the issues of therapeutics, tests, and most importantly, vaccines, this is an area where we need global mobilization of the production capacities. Just like we have generic medicines in many other areas, we need generic vaccines. We need to make sure that the kind of vaccine divide that's already been described doesn't occur.
Petya, if you think about just sort of making a bridge from what Joe Stiglitz is talking about, but also to some of the longer term issues that Ravi has mentioned, do you feel that we do have to think a bit differently about our approach to reducing inequality now, not just in response to pandemic, but in response to the way the world has changed over the last few years and some of the trends we've seen?
I would say that the challenge that we had before is now much, much bigger, which would call for even more collaboration and coordinated approach, at least in some aspects. So when it comes to so one area that comes to mind, it was already mentioned, of course, is in terms of the production of vaccines and having the COVAX facility properly funded and such to make that availability for the low-income countries as well. And I think that this is where we're hoping that stepped up multilateral cooperation will yield results and you know, which I think would be extremely important at this stage. But the other aspect, which was alluded to earlier, was in the area of climate, because we do agree that this is an area of opportunity, especially when it comes to green investment and green infrastructure investment, which in our view is an integral part of what the package should look like in terms of solving the climate issues. Green investment, raising the price of carbon, and then R&D incentives to develop new technologies. But that first part, the infrastructure investment, is something that could help in the near term in terms of the recovery across the board, and at the same time have these benefits in the longer term. The third thing I would mention is that, and we had not talked much about this yet, but the crisis has also increased inequalities within countries to an enormous extent. And we're talking about access to basic services, to health, to quality education, and such. And also it has an enormous impact on the labor market. And we see this in both advanced economies and emerging and developing economies. There's been an employment shift. The people who had been affected the most have been the low-skilled ones, the women, unlike previous recessions, and also the young. So the type of policies that I think would be needed to overcome or to at least to mitigate the impact of these inequalities, I think would require just a shift in thinking in terms of what happens with taxes, with having a more progressive taxation, about spending on some of these services. So this is, again, this is an area where we are doing some work, and we hope to have more specificity in this in the coming months. But just as I said, the challenge is enormous. I'll stop here.
Can I just raise one question? Over the long term, many of the innovations, say in climate change, are going to be very capital intensive, not require a lot of labor. A lot of other kinds of technological changes are going to be reducing the demand for labor. And there's a broad concern that the developing countries are going to be disadvantaged, and the disparity between them and the advanced countries. So we'll be getting divergence rather than convergence, because basically the value of unskilled labor and the value of natural resources, in particular oil and coal, is going to go down. And that will actually exacerbate existing inequalities. And question is, do you agree? And what can you do about it?
Yeah, I mean, Ravi, I think, sorry, but Ravi, given what you've written, I wonder whether you want to comment on that. I mean, it's the opposite of the globalization that we've had over the last few decades has narrowed, until recently, has narrowed the gap between the two. But the earlier period we had in the late 19th century, I think there was a rising divergence from the way that was driving. So are we going to that kind of model, and is there any way to offset it?
Yeah, no, I think so. Let me just say one point to add to Joe's point, which is that the intersection or the interaction between employer power in labor markets and labor-saving technology is particularly deadly. Okay, that combination exacerbates inequality effects of labor-saving technology change. So I think that's an important point also to bear in mind, which again has a policy implication in terms of support for trade unions and so on. I think that there's that element to it. So yes, I would think of this technological juggernaut as actually affecting everybody. Clearly, the US and the UK and Europe has seen the first part of it. But if you look at China now, okay, there's a major issue with the same thing, and the whole issue of state-owned enterprises, which is where a lot of the labor is there, and so on. And as technical change moves, the Chinese government is very worried about this, and it's coming throughout Asia. It's now coming through. So I don't think it's anymore. It's going to be a developing versus developed country issue. I think it's going to be a global issue.
But how you say yes. Go ahead.
Thank you, Stephanie. Joe Stiglitz asked a very good question. It's a good comment, and Ravi has responded as well. I think there are some technologies that, in fact, won't hinder job creation, and in fact may promote energy equality. For example, imagine rolling out mini grid systems in rural areas, or indeed standalone, solar energy, units in rural areas. And this is happening in some parts of Africa. Let's say $500 per unit, for example, in a village that will power 4 light bulbs, 2 USB ports, can charge a phone. Children can do homework, in the evenings. And that doesn't really kill jobs. On the contrary, it just creates, energy access to education, and in fact creates jobs for those who are manufacturing panels and distributing these panels. So maybe there are some aspects which are pro-job creation, perhaps, as opposed to killing jobs. One comment that on what Brooks mentioned regarding internal inequality, national inequality, that as policymakers, the way we are responding to this is through increased cash transfers. That's what I've been pushing here in Zimbabwe, increasing cash transfers for the vulnerable, because we notice that inequality is increasing. But of course, the one has fiscal constraints and so forth. But this is where, again, we expect development partners to support, and they are supporting right across Africa. So I would say one instrument is cash transfers in dealing with this inequality that is increasing. Thank you.
Petya, do you want to respond?
Yes, thank you, Stephanie. It's just a very quick reaction that when it comes to the whether the transition would be job rich or not, what we see is that at least some of the new technologies actually are more labor intensive than the existing ones. The problem, however, and I think that this is absolutely right, that it's the skill composition which is going to be an issue. So one of the things that you think makes sense is as we undertake this transition to think upfront about the distributional aspects and recycle a lot of the revenues that is going to be collected on carbon. So we have estimates that basically, in China, if you recycle about 1/6 of the revenues collected, then you could compensate the bottom two deciles of the income distribution, and a similar number for the US is about 1/4. So anyway, I just wanted to acknowledge that this is an incredibly important policy question that we need to think about. Thanks.
We do have quite a few questions. I think Professor Stiglitz is now gone. I was going to ask him a final question, but I think he had said that he would need to leave by now. But we have had some questions around climate, as you'd expect. And one of them is, what does unpreparedness for COVID-19 and its devastating effects imply for our response to the next global disaster, climate change? I mean, I would also put it another way, is if you look at, some environmentalists, I think, have looked at the scale and the pace of government response, the shutting down of entire economies almost on a dime in response to COVID, and thought, well, maybe we can aim higher in terms of a government response. When people see the danger, they do impossible things. Ravi, what do you, well, actually, we've got Joe back, so maybe we should take one response from him and then and move to the others.
Well, I mean, what is clear is that we've rethought the role of government in response to the pandemic. We always knew that government, we should have known that government is where we turn in times of crisis. Michael Lewis wrote a very nice book called The Fifth Risk, in which at the beginning of the Trump administration, he wrote that one of the most dangerous things that the Trump administration was doing was weakening our ability to respond to crises. And he described all the risks and all the ways that they were not taking adequate measures. It's interesting, two things that he didn't emphasize were things that actually turned out to be important. He disbanded the White House Office on Pandemics that dealt with pandemics, and he defunded the Centers for Disease Control, which deals with contagious disease, and particularly that part of the Centers for Disease Control that deals with viruses that jump from animals to humans. So it could not have been a worse targeted weakening of the ability of government. But to put it in a broader historical perspective, for 40 years, there's been an attack on the role of government. You know, Reagan said, you know, the worst thing is, I'm from the government, I'm here to help you. It was all this attack on government. And we realized that for our society, we need a balance between market, state, civil society. And we got that out of balance. And one consequence of getting that out of balance was we lost the ability, the commitment to create a more equal society with shared prosperity. And it's not an accident that the 40 years beginning with Reagan and Thatcher are the 40 years where inequalities grew, divisions in our society grew, including the divisions on health and income and every other dimension.
So, Ravi, I guess going back to what I said, you look at the scale, what governments were able to do when they had to, not just the money spending, but the shutting down of economies and activities, much more than environmentalists have ever asked for. Is that inspiring, or is it just further proof that the rich world is only ever going to act to save itself from problems that are right now?
Yeah, so there's that issue, but I wanted to take up what the issue that I was going to take up before you turn to Joe, Stephanie, which is this business of the next crisis, so to speak. Okay, and in some sense, being ready for the next crisis, especially so far as protection of the poor is concerned, even though we don't know where it's going to come, when it's going to come, and what it's going to be. I think that's the question. That's the problem that faces us. We know they're going to be crises and so on, but how do we get ourselves ready for those, especially in terms of protecting the poor? And what I've been arguing for is that actually there are many, many schemes. If you look at the government of India, for example, there are many, many schemes on the ground which have been there actually crisis after crisis and so on. But but there's no coordination among those. They work against each other. And also funding of those schemes is an issue when the crisis hits. So I've argued actually for something analogous to the financial sector assessment program, which what does the financial sector assessment program do in the IMF? It imagines crises. It says, suppose this sector failed, what would be the knock-on effects on banks and this and that, etc. So I'm saying, let us imagine different types of crises, a reasonable, possible crisis, and ask the question, what is the impact on the poor, and how are the systems currently on the ground likely to address those. And then on the basis of that, propose a reform of the current structure of support for the poor. And the second point is that, in fact, financing is a key issue, as Mthuli and others have pointed out. But I think the international community moves too late on this score. The crisis has almost passed before we move to support these things. So I've been arguing, and again, there are instruments of that type, which is that we have financing lines which are available the moment that certain triggers are breached. The moment that triggers are breached, those financing lines, I mean, you've done all the due diligence work beforehand. So the moment the triggers are breached, those financing lines allow a finance minister like Mthuli to actually support the poor. So I think this notion of diversity, of how to be ready for the next crisis, even though we don't know what it's going to be, I think is one way to frame the question.
Mthuli Ncube, do you think you agree? You're on mute.
Let me turn this on. Yes, we have had a serious climate shock here in the last 2 years, in addition to the pandemic, which has just started last year. We had a cyclone, it impacted Zimbabwe, Mozambique, Malawi. And then at the same time, literally a few months later, then there's a drought in another part of this region, especially Zimbabwe. And the way we have responded is really to accelerate the construction of dams, as well as investment in irrigation. And this is real for us. And in the rural areas, we've had to drill a lot of boreholes. It's been a massive undertaking, and it's taken a lot of government resources. So we have no choice but have had to respond. Of course, the upside of providing water, whether it's from dams or boreholes, is that you also deal with the health crisis, because then you're able to provide clean water as well. And so forth. So you're dealing with both, making sure that you deal with the drought situation and also support the health imperative. So and then coming to the cyclones, we have spent considerable resources on building back better, be it roads, bridges, recycling people in the right areas, so that they are not impacted by the cyclone the next time around it comes. And this is a very susceptible part of the world, of our region, the eastern part of Zimbabwe, bordering Mozambique, and the whole of a part of Mozambique, in fact. So recycling people in the right areas that are less prone to negative impact of the cyclone is critical. So we're spending resources here. We've responded, and again, we need quite a bit of support from the international community in this regard, from development partners, and they've been responding. But I must say that their response has shied away from investment in critical infrastructure. It's more the sort of softer social issues, some cash transfers, but investment in the right type of infrastructure is key to responding to climate change. Thank you.
Petya-Brooks, you talked about this as a crucial, this is something that we need to be continued to work on and to continue to think of mechanisms. Do you think there is a criticism there that we're not looking enough at the infrastructure, the physical investment piece of this in the approach?
Well, let me make 2 points on this, and perhaps going to the question that you asked earlier in terms of how we see also a future crisis. And it's hard to look at a silver lining in the midst of a pandemic, but if there is one, I think there are signs that attitudes towards climate issues and also towards government provision of services, and including also the level of taxation and the type of taxation, are changing as a result of the current pandemic. And the second point to make on this is that just in terms of preparedness for the next crisis, we have seen really large increases in debt across the board, but also in low-income countries and in emerging markets. So when we think about a future crisis, we need to be aware that the starting point, unless those levels are reversed, would be much weaker. So this reinforces our call for resolving debt issues, including through early debt restructuring and such. Now, when it comes to the infrastructure, I'll just go back to what I said earlier. I think we do see the logic of investing in that infrastructure now or in the very near future. You know, of course, the priority is to end the health crisis, but as soon as it's possible, investing in green infrastructure and more generally in infrastructure that would pay the dividends going forward is something that makes a lot of sense.
I'm interested if we go just embedded in what both Ravi and Joe have said about technological change is actually something that would be at odds with how we think about development often. If we think that the predominant technological change that we're looking at going down the track is actually going to increase inequality between countries and potentially within countries as well, and that maybe trying to lean against that is something we might want to do, that seems very at odds with a lot of the strategies we have for supporting developing countries and the kind of path to development that we still talk about. I don't know whether either of you wants to, I mean, what's the direct implication for development policy or for domestic policy of taking seriously that concern?
Well, I think there are a number of things. One of them, I think, Ravi, or you mentioned already, leaning against these trends, recognizing that they're there, and thinking about some of the implications. So Ravi mentioned one explicitly, that some of the changes in technology are leading to more market power for corporations, less market power, bargaining power for workers. Another correlated one is that tax revenues are increasingly going to the big tech companies, and they are extracting profits, money out of developing countries, emerging markets, and other advanced countries. So resolving the issue of digital taxation, resolving the issue of multinational corporations who have used globalization to avoid or evade taxes is absolutely critical. I think that one of the important global public goods is global knowledge. And the patterns of innovation have been driven by the advanced countries. And they worry about high wages. But that's not the problem in developing countries and emerging markets. So it might be a good idea for the international community to get together and say, let's try to think about how we change steer the direction of innovation in a counter way, in ways that save our planet, but don't save labor, save capital, which is for the developing country, the scarce resource.
I mean, Petya-Brooks, the IMF has focused a lot more on inequality in recent years, but I'm not sure they've quite taken that further step that Joe is suggesting. How do you respond to what he's saying in terms of what he should be encouraging?
You're right, Stephanie. We have been thinking a lot about inequality because, you know, through the lessons of history, we've also realized that that is a key component of thinking about macro stability, which is our primary mandate and such. And we are also aware, of course, that we have our sister institution, the World Bank, and also a lot of the development banks are looking at more the development issues. But the two, of course, macro stability and development are so interconnected. And now also with the issue of climate, which is kind of an umbrella across all of this, we've also stepped into that area as well. I think what I could say is that these are, of course, the right questions, and I think we'll take them very seriously in terms of thinking about them. I don't think I have any answer to offer at this stage.
Oh, well, that means he's definitely onto something if you give such a diplomatic answer that we should be. But Ravi, do you think?
Yes, so I think this is, again, so if we think of this we can first of all just for analysis, think of the technological shock as being exogenous to start with, and think of it as being essentially it's a demand side shock in labor markets. It's increasing the demand for skilled labor, depressing the demand for basic labor. Just think of it in those terms. And that's what's leading to the increasing inequality in wages and so on and so forth. So one response to that is to work on the supply side, and you sort of create the increase in skilled labor and so on. It's a very clear policy thing. And in fact, it's argued that actually a significant portion of the Latin American decline in inequality when it happened was because of conditional cash transfers conditioned on secondary school education and so on and so forth. So the supply side was working well. So that's one thing on the supply side. The second would be let it play through and redistribute after the event. And again, Latin America, they did that as well. And the whole discussion of universal basic income and so on and so forth, I think fits into that part of the thing. Those two things I think we can discuss, and there's a lot of literature and a lot of analysis on that. But there's a third one which Joe touched on and which the late Tony Atkinson emphasized a lot, is why should we take the trend of technology as given? Why should we not bring in state and state-private sector partnerships, as Joe said, to steer technology in a particular direction? And when I make this point in audiences, people say, "Oh, there you go. You're trying to Canute, trying to push the tide back of technology. There's nothing we can do. It's just coming at us, and we have to adapt to it and so on." But it seems to me, and again, Joe has made this point many times. When the government wanted to, it did change the direction of technology. I mean, the internet is what it is because the government took it. Agricultural yields and so on improved. Because Norman Borlaug was in the field in Mexico, sent there by public sector and foundation entities to actually change the direction of technology. So in a sense, I think we should have some amount of confidence that a public-private partnership can in fact make new technology more labor using, as Joe said. Now, if you ask me what exactly those things are, I couldn't tell you, but on the other hand, I think this is the direction, rather than accepting the steer. And this was a point that Tony Atkinson made very strongly in his last book, Inequality: What to Do About It.
And Bill Gates has actually sometimes made a similar point. So it's not just from academics. Yeah. Mthuli, Ncube, if you talked about some of the policies that you really want to achieve, I sort of think many of the prescriptions, the things that investors are saying Zimbabwe, other countries should do, they're still saying many of the same things they said a few years ago. You must get government off the back of business. You must deregulate and have less intervention in markets. How do you square those kind of demands with the kind of conversation we're having? As an economist, you have to combine both.
Absolutely, we have to combine both. Government has a role, especially in these turbulent times. There's no question about that, but also recognize that the private sector is a key partner. So really working together, the private sector is the way to go. For example, just simply in this issue of acquisition of the vaccine in Zimbabwe, for example, in fact, today I launched a private sector initiative, for what it's worth, to raise additional resources from the private sector to complement what government is already doing. And I'm just giving this one example. Ravi, in response to an issue raised by Joe Stiglitz, that we need government and again to work together with the private sector in driving the technological trend. What I'm noticing in Africa is that Africa is not short of the tech entrepreneurs, especially in the ICT sector. What's missing is the entrepreneurship ecosystems to support these entrepreneurs. And that's where government is needed to support these. But also we need the corporate sector to support them. You can imagine if you're in Silicon Valley and you're the inventor of Zoom, there will be enough angel investors to invest in your product. I can assure you, some guy on a corner of Zimbabwe is also just invented his Zoom platform, equivalent platform, but does not have the kind of support in terms of capital, venture capital to support that initiative, or in Kenya, for example. So these entrepreneurship ecosystems require both government and the private sector to work together to make things happen and close this tech divide. We do have technology, potential entrepreneurs in Africa. but they just need this support. And clearly, in terms of crisis like this, both government and the private sector are needed.
There's Joe mentioned the digital taxation. We're going to run out of time in a minute, but I'm interested. You know, the OECD and the G20 is closer to an agreement on that than it has been in the past. When I talk to them, they insist it's really very close. But it doesn't seem to me that's necessarily going to involve a big global redistribution of revenues. It's going to involve quite a lot of rich countries getting more revenues off America and dividing the pie in a slightly different way. I mean, Joe, do you think that is it actually a game changer if you just spread those revenues across more rich countries? Or is there a way to do this? How would you do that better?
Yeah, now, what they've been discussing has been disappointing because it is mostly moving a little money around, changing the rules a little bit. This applies not only to digital taxation, but more broadly to multinational taxation. In the area of digital taxation, the one thing they can do that will make a difference is make sure that the information that the tech giants get from dealing with those in developing countries and emerging markets, the value of that information is appropriated by the countries. So, you know, they say the new oil is data. And where is most of the data? It's being generated where most of the people are. And where are most of the people? They're in developing countries and emerging markets. So to that extent, there's a lot more revenue if you recognize the value of data that you ought to be going to the developing countries and emerging markets. More broadly, the issue in multinational corporations is moving away from what is called the transfer price system to what is called the formulaic system, where the basic principle is that where the production occurs, they ought to get a significant amount of, that's where a lot of the profits can be attributed. And another important part of the agenda is a minimum tax, a minimum corporate income tax. The multinationals have engaged in a race to have encouraged the countries to engage in a race to the bottom and lower the tax rates. So that has been discussed in the OECD framework, but they're talking about a 12.5% minimum tax rate. So that's a lowering down so that everybody gets less and the corporations get more. That was defeating the whole purpose of this original initiative to make sure corporations were paying their fair share. So I'm a member of what's called the Independent Commission on Reform of the International Multinational Tax System. And we've called for a 25% minimum corporate income tax across countries for multinationals.
There's one question which we're going to close in a minute, but there's been several questions from the audience. We have a big audience, but it's a question which is a question I think that probably students ask more than other people. And the question is, should democracy play a big role in deciding how developed countries should aid the less developed world, or should the decision be with world leaders? Now, you know, in the UK, this is a very live issue because the government, having made a big commitment on its development target for how much it was going to give in development aid, has reduced, sort of broken that commitment. And by all accounts, it's a very popular thing to have done. People are turning inward and people are looking to themselves.
Well, since I'm Joe's student, I'll let him answer this question.
That's a hard question. I guess my feeling is that governments in a democracy have to work with their citizens and persuade them that it's in everybody's interest to have this kind of shared prosperity. We understand about shared prosperity within our country, and we're not going to have the same kind of shared prosperity across borders. But, just to bring it back to the pandemic that we've been, began the conversation with, it was pointed out, we're not going to be free from this disease until the whole world is free. As long as it's going around, there will be mutations that have the risk of coming back and biting us. And that's why, you think about it, it's so foolish that the advanced countries don't spend a few billions of dollars to save what would be in the trillions of dollars from the economic downturn. The second thing is we aren't going to have a really strong economic recovery until there's a global recovery. We have a globally integrated economy, and we're not going to have a strong global economic recovery until there's basically a recovery in developing countries and emerging markets. They've, in aggregate, have played an important role in the recovery from the 2008 crisis. China played a particularly large role, but China is not playing the same role in this pandemic. Its growth is much more muted. They've gone much more inward looking, so their trade surplus has increased. So in that context, it's even more important. It's almost in our own self-interest to help the emerging markets and developing countries, both with respect to the economy and with respect to health. And I think our leaders have to make that case much more forcefully and openly.
Well, thank you very much. I don't know whether there's anyone, whether Mthuli Ncube, whether you wanted to respond, or we're going to get ushered away. But I'm conscious that others might want to get involved.
I think in short, I think that this should be left to the leaders and not to the democracies in the developed countries to decide how much aid to give to the developing world. Let the leaders lead. I think that their job is to do exactly that, which is to have this vision, see the future, basically set the tone. So I would say, more to the leaders and less to the democracies.
Well, that's a brave thing to say to an audience of students, but it's a rousing thing to end on, definitely. And I think if the vision is that no one is safe until everyone is safe, that's also a good one to end on. Thank you so much to all of you, and I'll hand you back to Isabella.
Well, thank you very much, Ms. Flanders, and all of our panelists. I think I speak for everyone when I say that was a truly fascinating debate. And yeah, thank you, Mr. Ncube, one excellent note to end on there. It was really interesting, actually, to get this opportunity to consider, how we should be making plans to help the world's poorest and alleviate these global inequalities, and especially it's a very topical topic to think about it with regard to coronavirus right now, and then obviously the future of that. As you said, as you all agreed, it doesn't end now. It's definitely going to happen again. So thank you all very much for that, and thank you to our audience for your engagement there.